find that there's two meanings to fear. You just forget everything and run. That's the alphabet. That's fear. F-E-A-R. You could forget everything and run, or otherwise you actually face everything and rise. And this is where we believe POSB is going. We've just decided to face the occasion as it is and rise with our customers. That's why I think we're confident enough to take some of these big banks head on and, you know, snatch away some customers, although we know they snatched away some from us as well. As we went through this whole process, we know that the desire to meet our customers was there, one-on-one, but we thought of this novel idea where we're going to have this kind of situation, which I think my PR lady called, you called it mug and what? Mug and beer. Was it beer and bite? I know there was an old club sometime, you know, used to call pint and bite in Harare. It was bite and fight or something. That's not the intention. But here is just for us to actually have a burger. Oh, it's called burger and beer. So that's what we're inviting you to. It's a more relaxed atmosphere where we brought in some experts in some areas, but they don't want to call themselves experts. They want to call themselves social economists. There's the social aspect to it, where you have this free mind in a pub, and, you know, people talk on ideas, exchange ideas, and they can say these things lightly. But obviously, when the other hour comes where there's interaction with our customers, we'll need to sit down and talk to them one-on-one and address their challenges. There's actually over 20 of us as POSB to give you the attention that you may desire in all this. I don't want to take much of your time because I think we want to give it over to those experts, our social experts, and then we'll talk more to you at a later time, you know, when we get into the real drinks. Please be free, meet any one of us. I thought we could have been easily identified from our T-shirts. That's why we bought the corporate regalia. But in case you don't see them, we'll always direct you to them. Thank you very much for listening to me.
Gents, we've been asked to talk about a quick review of 2021. Our thoughts? Good year, bad year?
Well, if you look at it from the perspective of the year before that, 2020, where we had a severe lockdown, we had a drought, we had economic contraction. Last year was a very good year. We had a fantastic agricultural season. We had a windfall, manna from heaven, almost $1 billion.
Manna from heaven.
Almost $1 billion in the SDRs from the IMF. We had record levels of diaspora remittances. Our local stock market was one of the best performing exchanges in the world. You know, not just in nominal Zim dollar terms, but in real terms, you know, the return was more than 100%. So I think that one can say with high conviction that 2021 was a good year.
And yet the currency still lost over 100% of its value on the parallel market and 40 or 50% on the official market. Good year?
I think it's a bit mixed. And you're quite right. If you look at the inflows in terms of how much we actually received in currency, it's $9.7 billion. That's like the highest we've ever received in this country. And yet we still had a currency problem. So the question is why? Why is the good rains, everything else that Rufaro has said, why is it not translating as far as the currency is concerned? So I reckon that it was a better year than 2000, but not exactly.
2000 or 2020?
2020. It was a better year than 2020, but certainly not as good as it appears on paper.
But can you answer the question that you asked? 10 billion in inflows, 9.7, and the currency loses half its value. How do you reconcile those two?
Because we're printing more than we are getting. The percentage of growth in the amount of money we're printing is way higher than the growth in earnings coming into the country. Because remember, the exchange rate is purely a price between your currency and offshore currency, which is the international currency, US dollar. That's all it is, supply and demand.
Do you agree?
I tend to agree with him. I think that even if you look at the official numbers from the Ministry of Finance, there were some months where we ran fiscal surpluses, but for the most part, and for the year,
Do you believe there was a fiscal surplus?
yeah, there were fiscal surpluses for some months last year, but I think the net position at the end of the year is that we ran a deficit. And if you look at the official numbers from money supply growth perspective, the growth is material. And obviously, I think the most telling indicator of what's happening with the Zim dollar is what's happening on the parallel market, and that speaks to quite a bit of printing.
But wait, fiscal surplus, and either of you, fiscal surplus, no drugs in the hospitals, roads falling apart, ZESA is a little bit of a mess. Reconcile that to me. Is there a fiscal surplus?
There was for a bunch of months. And that's not to say, and even in the months that we did see a fiscal surplus, that's not to say that we had solved all the country's problems. It's just simply to say that for that period in particular, we saw less, we collected more than we actually spent.
Well, I think that a lot is happening at the central bank. So if you look at just the last year on its own, we printed money supply of Zim dollar was, October is the latest that we have, and it's more than 250% of increase in Zim dollar. If you stretch that over a 2-year period, that gets to 1,000%. That over a 2-year period, we've printed more Zim dollars. Granted, not a lot of it, some of it is central bank growth in money supply, but a lot of it is bank credit that's actually increasing, especially over the last year. So just to give, because this is a banking institution, they might want to know this. If you look at the total bank loans in 2019, around about the same time, a year ago, it was around 400 million. This is using the parallel market rate. Today, it's about $1 billion. So you can see that it's more than doubled. So there's a lot of credit creation that's happening outside of the central bank, but obviously driven and speaks to the monetary policy.
But isn't that a positive? When you see banks creating credit, it means that they are identifying assets that they're excited about in terms of growing their loan books, because they are bankable projects out in the economy. So does that not speak to a certain degree to economic growth?
Well,
I tend to differ.
Is that increase in credit going into productive sectors, or is it going into speculation?
Speculative. It's purely speculative. It's arbitrage. Banks can see the opportunity that if there's credit creation of Zim dollars, in 6 months' time or in a year's time, it'll be worth less.
Isn't this the other side of your phenomenal ZSE performance? How does the exchange super perform when the economy is not looking so healthy? Where's that money come from?
So a lot has to do with the inflation. Okay, so if you look at last year, the performance is coming from a very low base in 2020, where we had economic contraction and the outlook was very negative. And obviously, but the bigger aspect of this movement in the exchange that we saw last year had to do with the capital market players having a lot of Zim dollars that they couldn't place anywhere else but the ZSE. So, and I think that phenomenon is going to continue.
Where was the Zim dollar coming from?
Isn't that what he's saying?
Where was the Zim dollar coming from?
Well, look, I think that a lot of companies, because if you think about the capital markets and the pension fund sector, a lot of the money actually comes from companies making pension contributions. So if you think about it in nominal Zim dollar terms, if the companies are doing bigger numbers, then the receipts are going to be significantly higher, and that money is going to end up on the ZSE. But a lot of it also has to do with the fact that there was a significant crackdown on the parallel market. So any Zim dollar savings that wanted to ring fence themselves from inflation in a way that was legal chose to go to the ZSE. So a lot of the excess money in the system from inflation ended up on the ZSE, and that's one of the other reasons why we saw this outsized performance.
So you're agreeing with Tinashe?
It's not all speculative. I don't agree with him completely, but he does have a valid point that there is quite a bit of money, and I wouldn't call it speculative, right? So if you are running a legitimate business that is generating positive Zim dollar cash flow, and you want to ring fence it from inflation beyond reinvesting in further growth of your business, what are your legal options? Outside of property, the ZSC is the only other place that you can legally ring fence Zim dollar savings against inflation. And so that's not speculative, that's just defensive behavior.
Also
beg
known
to
as
differ.
speculation.
Yeah.
But you talk about, I mean, you touched on other asset classes. So maybe let's touch on those quickly. What did we see on the property front?
I think property prices did not change significantly in hard currency terms between 2021 and 2020. Maybe you can correct me if I'm wrong there, Tinashe.
No, it actually went up. I think there's a lot of, so there are two sources of Zim dollar currency. You know, people who end up getting Zim dollars for whatever reason, one of which is exporters. So it's not necessarily that exporters would love to have Zim dollars, but the central bank takes 40% and then overburdens them with Zim dollars. So what are they supposed to do with those Zim dollars? It ends up in the property market, it ends up on the stock market, and it is speculative because it wants to preserve value. So there's that one. And then the second one, it's an importer or anyone who's in business who realizes that it's much better to use banks' financing than to use their own currency, US dollars. Because I think in our currency, there's a preference, and I tend to agree with the central bank here, partially, that there is a preference for wealth preservation. And wealth preservation, you can only do so in US dollars or in hard currency. And what you end up then having to do is use the bank's balance sheet to grow your products, to grow your trade, and that is in itself increasing the money supply in the economy.
Okay, maybe just moving on. Do you want to talk about the current account? What happened to our current account balance?
Okay, so to simplify so that we don't become too technical, what we can say is we are exporting $5.2 billion. This is actual goods and services, but we also import about $5 billion. So as far as the trade is concerned, we are in a deficit, but it's covered by, and these are the things that you have highlighted, there's the 1.4 remittances that's coming in. So that's money coming in. It's got nothing to do with production in Zimbabwe, but it's, well, we have exported individuals. Our children, we've exported our children, and they're bringing in $1.4 billion. We've got the SDR, that's another $1 billion. You've got aid, Western aid, that's about $850 million, just last year alone. So if you think about it, that's close to $3 billion over and above the actual production that we're doing in Zimbabwe.
So, I mean, the question keeps coming up then. Look, we generate 10, we import 5.2. Why are we short of currency?
All right, okay, so let me simplify the argument for you. Elsewhere in the world, a dollar that gets into the economy starts from primary production, from farming, and then right through to tertiary industries. So it sort of circulates around the economy quite a bit within the economy. The dollar that we're getting is purely consumptive because the individual who's earned it has earned it in South Africa. So a lot of the production has happened in South Africa, and all they're doing is taking away their savings and sending it home. Now, when it gets here, it wasn't part of our industry, but it's part of our consumption. So if you walk into any retail outlet, you'll see a lot of activity because a lot of that activity is not driven by jobs, by people who are employed, but it's actually driven by people who are just consuming.
But Tinashe, this is accounted for in the imports figure, in the 5.2 billion.
No, what I'm saying is your dollar, you don't find it in production. You only find it in consumption.
Yes.
So that's why you have problems. You have these structural rigidities.
No, but I collected 9.7. I earned 9.7. I spent 5. I should have 4 in my pocket, right? Where's it gone? You're the one who said you're going to simplify it.
Yeah.
So where is it?
Well, part of it is under the matrices. So about 2 billion of it is not in the formal economy. It's actually under our matrices because there is still distrust in the formal system. That's part of it. Part of it does not come in as actual cash. So it comes in as, especially in AIDS, Western aid. It comes in as drugs. So our people are getting treated by Western drugs. So we see the drugs, but we don't actually see the money.
But it's in the imports. It's still in the 5 billion.
No, the 5 billion, that's imports of actual goods from importers. Aid is just reported as just aid coming in.
Okay, I'll take your word on that. So anyway, let's turn to 2022. I mean, what's the outlook? What are we seeing? Maybe starting with the big picture. We've been reading, seems as if the world is in trouble. And is that a fact? And what does that mean for us?
Okay, so when you look at the global economy, and as Zimbabwe, we now need to be seriously worried about the global economy because of two things. The first thing why we're worried about the global economy is because we are, after 40 years, I don't know, anyone who's above the age of 60 or 70 might remember the 70s. So there was this thing called global depression in the 70s, but a lot of us didn't experience that. But it's now in the news. It's now a big issue. And why we're worried is because there is international inflation, global inflation. And when you're a dollarized economy, you're actually importing part of that inflation in because we are a net importer country. So there is global inflation that's coming in that's affecting our imports. If you look at the price for oil, that's now above $90, and that's, I think Rufaro can speak to what that means.
Well, we are importers of oil. Every liter of it that we consume in this country is imported. So if the price goes up, we feel it at the pump, and it will filter into the rest of the economy because transportation is basically a service that every sector uses. So it's definitely going to have an inflationary impact on our economy here.
Yeah. So, and then the second thing that we need to be worried about is how the Fed and international banks are going to, international central banks are going to react to this, which is, so first of all, you're affected by high inflation. But the second thing that hits in is when the Fed is now raising interest rates. Now, you tend to find that we are net importers of foreign loans. And if those loans become dear, if the interest rate is now increasing, because right now the Fed rate is 0.25, and we expect at least 3 rises in the next year, it could end up around 2%. That is quite a high rate from where it is right now. So that has a serious impact in the global growth rates. That's why you find the World Bank, the IMF is already revising downwards their global growth rates. So if you're in Zimbabwe, you're a little worried about that, about just the growth in the global arena. Why? Because capital is shy. So if the globe is in a stagnation, capital will run to America. It won't be as adventurous as it would have been in a growing economy.
But okay, what about China?
Headwinds there. I think the big issue with China is it grew at 8.1% last year, but the fourth quarter, it grew at an annualized rate at around 4%. So the headwinds there is if the demand is not coming from China, it obviously affects especially emerging markets because they are a big player in commodities and emerging markets. So the headwinds there really speak to the low global growth.
Yeah, well, Tinashe likes to have a very pessimistic take on things, but I think that what's happening on the global stage might turn out to be a net positive for Zimbabwe because we have global inflation also means sky-high commodities prices, and Zimbabwe is an exporter of commodities. So if we significantly increase production on the commodity side of things, which we're seeing happening with gold production going up, with platinum production going up, and other mineral production going up, then maybe on a net basis, we will, on the import side, we're certainly going to suffer from higher fuel prices and imported inflation. But on the export side of the ledger, we might actually benefit significantly from the higher production at higher prices, and the net position might actually be positive for us.
And maybe just before we leave this, you guys want to comment on South Africa? What's happening in South Africa? What are we likely to see? Because that's a good predictor of what's going to happen here, right? Well, it's got a strong impact on what's going to happen here.
Stagnation. They have not made the structural economic changes that they need. I know Rufaro might assume this is another doom and gloom, but the reality is the chickens are coming home to roost. South Africa has not made the right investment. So countries only grow because of one thing and one thing. Whether it's China, it's Japan, it's America, countries only grow because of one thing, which is savings. Your savings rate has to be high. So if you look at China, for example, their savings rate is 45% of GDP. So whatever they're earning, every dollar a household earns in China, 45 cents goes into savings. What's been happening with the savings in South Africa? I'm sorry to say, but I don't see any growth because they have no savings. So if you have no savings, there's no growth. If there's no growth, I think that I'm not looking, I don't think there's a positive outlook as far as South Africa is concerned.
You agree?
I'm a bit more optimistic as always. I think that notwithstanding Tinashe's views on savings, I think South Africa is actually also an export-facing economy. They have a massive mining sector. They have a massive tourism sector, which suffered quite severely through 2 years of COVID. And this is going to bounce back. And I think we will benefit from the turnaround in the economy.
Can I ask Rufaro a question? Because maybe it would be very illuminating if you could answer this. How do you expect commodity prices to continuously go up if interest rates are going to go up?
Well, commodity prices are driven by demand. So if you think about inflation, if we unpack it, inflation is the prices going up, and one of the things that's driving prices is the raw materials that go into the things that we consume, whether it's vehicles or stuff that we pick up from the supermarket shelf. And the commodity boom actually preceded the rise in inflation. And if you follow the conversation in global capital markets, they're talking constantly about supply chain disruptions. And what are they talking about when they speak to these supply chains? It's not getting enough raw materials to make stuff. So I think that I don't think that commodity prices are going to keep going up. They're already at record highs, but I think that they're going to be at these levels until the supply side of the equation gets sorted out.
But I think I'm with Tinashe on this because, look, let's take platinum as an example. What's the biggest use of platinum? Automotive sector. One of the things that drives how many cars are sold is how they're paid for, right? In the rest of the world, people buy their cars on credit. And if the cost of that credit goes up, surely less cars are going to get bought. And consequently, less platinum is going to be needed.
Well, then the platinum markets and the way they're pricing platinum today certainly know something different from you.
On Tinashe's side, the market's always right. Okay, anyway, coming closer to home, what do we see happening? I keep saying it's an election year. Everybody says, no, the election is in 2023. But look, it's going to be in the first 3 or 4 months of 2023. So we'll soon be within 12 months of an election.
So my view is, I've got 2 scenarios. The first scenario is you print for an election and you end up with 2008 with empty shells. I think that memory in itself will somewhat taper the amount of printing. That's my view. That's my scenario 1. Scenario 2 is where you figure out that perhaps you don't need to print as much. You could tax. So you use taxation. So you tax the exporters, you tax individuals, and you get real US dollars, and you ensure that you have product on the shelves. And that is how you will be able to survive and, ride through the bumps.
That is,
those are my 2 scenarios.
If by you mean Mtuli?
Yeah, if I'm Mtuli, what I'll be pushing for is tax rather than print. So if I can push as much as I can until 2023 by taxing the exporters, because right now, if you think about it, the effective tax on just taking 40% from the exporters it comes to about 25 cents for every dollar of export. And that 25 cents is real hard currency that's going to the auction. It goes to the auction, it buys consumer goods, and that just ensures that you have food on the shelves. That will be my number one issue if I'm Thule. The big worry is the infrastructure. So my big worry if I'm Thule is I can sort of control what happens as far as the auction is concerned, and I can talk to the exporters so that I text them and somewhat give them a rebate after the elections. But my big worry is infrastructure. How's the infrastructure going to be funded? And the sort of numbers you talk about when you talk about infrastructure, this isn't the billions of US dollars. So how are we going to fund that infrastructure? If I'm Mutuli, that's what I'm more worried about.
Well, aren't you going to kick that can down the road as well until after the election?
We now know that it's an election issue, that they want to deliver infrastructure. So the big question, anywhere in the world, maybe if you look at Joe Biden, he didn't get his infrastructure bill from his own party, partly because of the funding. He kept on being asked, where's the funding going to come from? So I think it's a similar question. It's not about the infrastructure and the grandiose idea. The question becomes, where are you going to get the funding from?
Your take, Rufar?
I don't think it's as big a deal as Tinashe is making it out to be. So if you look at last year as an example, we did quite a lot of infrastructure spend. I think more than 250 kilometers of road. And we had official inflation of 60%. We ended the year at 60%.
No, that's not bad at all. 60% is all right, eh?
But in the if you think about it in a Zimbabwean context, and Tinashe made reference to 2008, which was really abysmal scenario where we had inflation measured in the thousands and empty supermarket shelves, right? You know, if you drove around Harare in December, you know, last month, you would not get the sense that we were living in some dystopian crisis. You know, it's a functional country.
So 60% is okay.
No, I'm not saying it's okay. I'm saying it's bad, but you know, I think.
You hope for more.
No, I think that if somebody makes a calculation that we can live with it, I think that would be an accurate take. So I think that we are going to experience, by international standards, high inflation in 2022. It might, I suspect it will be worse than last year. You know, but I don't think it's going to go completely out of control. I don't think that we're going to have anywhere near the kind of scenario we experienced in 2008.
So maybe if I could come in there. If you look at the healthcare system, I think aid is going to come in there. We're expecting about 750 million, a little less than last year, but it's still quite significant. And a lot of it goes into healthcare. If you look at manufacturers and importers of food items, the auction is there, and you know, exporters, because of the high commodity prices, might be willing to, you know, ride it through the next 6 to 12 months. My big worry is, where's the money going to come from as far as infrastructure is concerned? And you haven't answered that. Perhaps you can help us.
Well, look, maybe the real question is, can it be wung? Will they be able to wing it until the end of the year? We're all aware of how much of a torrid time ZESA has had through this rainy season, keeping the grid up and running. We're all seeing our drive to work getting worse by the day because of these large amounts of rain that we've received over the past few weeks. Will we be able to keep it together with sticky tape over the next 12, 15 months? Or will there be a sudden need for a big bill? I mean, you know, it's the same in all our houses, right? Your lights start blinking, you can probably wing it for 4 or 5 months, ignore it, but eventually one day you're going to get home and there's no power.
If they delay infrastructure until after the elections, they can wing it. But if they want to push the infrastructure, then the money's just not there.
Well, you can delay by printing. You can print, and you know that the bill the impact will only hit you a few months down the line.
Not in Zimbabwe, because we don't suffer from money illusion that Americans do. So the whole idea, they call it seigniorage profit. So seigniorage profit that central banks make is they print money and people only figure out that the central bank has been printing money 6 months down the line. But you bought goods with real money today. So the central bank and the government buys goods with real money today, and people only figure it out in 6 months' time. Whereas in Zimbabwe, you print just a little. The banking sector knows that the money is there. Everybody knows. So unfortunately in Zimbabwe, there is no money illusion profit, right? Which they could have done, but unfortunately it's not there. But I've clearly said, in terms of healthcare, we are somewhat covered. I mean, the Western aid provides up to 500 million.
Why do you keep saying
US
Western? We
dollars.
get quite a bit from China too.
I'm sure. I'm just talking about the numbers that I know of that are in the budget. So when I'm looking at it as Mtuli, I would say, you know what? I need to make sure that the stores, so if you're going in an election, you want to make sure that the healthcare system is okay, or somewhat, or winging it, using your terms. You want to make sure that you have food in the stores. I think that's a big, because I think we have some sort of neurosis as Zimbabweans about empty shelves.
About
and
cooking oil.
Cooking
Cooking
oil.
oil
I mean,
in
if we don't
particular.
see cooking oil, we know
the
that
sky is falling.
Exactly, the sky is falling. So I think they're quite
Yes, Tinashe
aware.
thinks the sky is falling. I don't.
They're quite aware that they can cover that. But the big issue that will keep Mtuli awake is, how am I going to fund the infrastructure? Because it's quite clear the politicians have said, for us, infrastructure is going to be number one. So from Mtuli is, where is he going to get that money? Just to give you a context, when the SDRs came into Zimbabwe last year, and they probably came in mid-October, by the time Mtuli gave us his budget in November, they'd already spent 144. They had spent a third of the SDRs, and 144 million had gone into infrastructure. So what that tells us is it's a big thing for them. But unfortunately, there won't be any SDRs in 2022. So we know that the politicians want infrastructure. Can Mtuli deliver that? That's my big worry. Everything else, I think we can wing it. If we didn't have the infrastructure spend, I think they could wing it right through to an election.
Okay, we're between people and their beer, so we need to move on. Your take on the banking 2022 and beyond?
Well, look, I think that if we zoom out for a little bit and think about banking in a global context, then we've seen the rise of fintech startups, mobile-first banking institutions that don't have brick and mortar branches and that sort of thing. And that trend accelerated through COVID. We've seen the rise and preeminence of cryptocurrencies like Bitcoin. I think it closed the year with a valuation of about $1 trillion US. And if you add up the market cap of all the cryptocurrencies in the world, they closed last year at $2 trillion. So I think these trends on the global stage are not going to go away. I think cryptocurrencies are here to stay. I think that the entire banking and finance sector is going through technological disruption. And I think that Zimbabwe is not going to be, is going to experience a lot of that. In fact, we already have to some extent, if you think about the penetration in our country of mobile telephones and mobile wallets. I think that transition has also affected the financial landscape in this country, and I think that will continue to happen in 2022. I think because of COVID and working from home and staying at home, people have learned to do their banking on their phones, and so I think that this transition where banks become more technology-centric is going to continue into 2022.
So this is one area perhaps I tend to agree with Rufaro. So what I would just do is add to what Rufaro has said. And the anecdote that I will give is, I remember I used to work for one of the largest banks in the world. And I remember in London, they were thinking about where the world of banking was going. And I remember that the CEO said, you know what, you need to get closer to the customer, but their idea of getting closer to the customer was just building as many branches as they can. And this was 2007, 2006.
They're no longer one of the biggest banks in the world.
So, that's an important anecdote there. But going into the future, I think that if you look at the technology that's actually happening in the banking sector, the nuance that you need to understand is it's taking away all the back office work. So if you look at payments, if you look at paper, if you look at currency, whatever it is, what it's taking away, and remember the people that eat away banks' lunch, it's operations that sit outside of banking, right? Whether it's mobile technology or it's other technologies. But the thing that they cannot do as far as banking is concerned is relationships. And I keep insisting that no matter how much AI you bring in, no matter how much you make commodity of back office, the one thing, we're going back to banking in the 18th, 19th century, which is you actually understand your customer. Understanding your customer, relationship management becomes the be-all. Elsewhere in the world, if you're a corporate, this is very difficult in Zimbabwe, but if elsewhere else in the world, corporate banking fees are very marginal. You never make any fees from that. But in terms of investment banking, in terms of relationship banking, in terms of just understanding the nuances of a customer, and that was banking in the olden days. That's what it was all about. And I think that that's where the world is going. That if you look at transactions, if you look at back office, you look at middle office in terms of risk management, which AI could perhaps do as far as the middle office is concerned. But in terms of just understanding the customer, just being in front of a customer and offering them coffee, understanding the nuances, understanding when they light up, when you introduce a product, and when
People
they
want to have
switch
their
off.
beer, you know?
Sorry?
People want to have their beer.
Well, that too. You start offering, you go into a banking hall or wherever, and you're offered a beer by your relationship manager, and I think that's where the value is, because that beer.
You can stop preaching now. Okay, you can see he's very passionate about it. My view is a little bit different. I think actually the future of banking, as we all agree, is digital. But I think an important part of the digital is its interconnectedness, and more computers will talk to each other. On the retail end, it's already happening a lot with your cell phone and the bank's computer. Those apps are going to require more and more permissions from you, which is going to allow the bank to make decisions about you without ever talking to you, because they're just going to know more about you. They're going to see what you're doing on Facebook. They're going to see where you live. They're going to see where you work. You can tell us where you work, but your phone will tell us where you actually spend your time between 8 and 5, and we'll really know where you work. So I think that interconnectedness is going to actually, especially on the retail side, remove the need for the relationships that Tinashe is talking about, because it'll be data-driven. But on the retail side, it will be commodified. So marketing will be very important, because every bank will be offering pretty much the same thing. On the corporate side, I think it'll be very data-driven. The client's computer and the bank's computer will talk, and they will make the best decision. The client's computer will decide which bank to go with, and the bank's computer will decide what level of client risk is acceptable to this bank. And I think, maybe not in 2022, but certainly within the next decade, this is where banking is going to be. But we must stop there, and we've gone a little bit over time, but Lawrence, maybe we can take a few questions? Or you're the boss. Can we take questions? So if anybody's got a question about anything we've discussed, or over there, Rufaro? Oh, I thought you were taking the mic.
No, I'm taking my tea.
So a question about anything we've discussed, or anything else economic that you might be curious what we think about.
Thank you. I'm more interested in the inflows that you've talked about. And I would like to, first of all, find out of those inflows, how much of that is coming from our own exports, from minerals, horticulture, and other agricultural products?
$5.2 billion.
You're sure that is the case?
Yeah.
That's what's reported.
That's what's reported.
And the bulk of that number is coming from gold and platinum. Do you have the numbers off the top of your head?
Gold would be, it was 30 tons, so that would be, yeah, platinum, nickel, those would be about close to 3 billion or so. Yeah, so agriculture is about 750 from tobacco. Yeah.
The most significant contributor now in agriculture. I know your interest, so I'm trying to use my words very politely, but really it's tobacco. Everything else is now very, almost insignificant at the moment.
Wilbur, do you have any? We have another question, please, gentlemen.
Thanks, Lawrence. I know you guys can't see me, but you can hear me. I'd like to know your views on the longevity and sustainability of the auction system.
So it's an interesting one. If you listen closely to what Rufara said, there's commodity prices. If you look at gold, for example, 2 years ago, gold was 1,300 an ounce, and now it's trading at 2,000 an ounce. Will your large gold producers stop producing gold? Will Zimplats stop producing platinum? You know, they can ride through, for example, the next 6 months. I think Zimplats will not stop exporting. They will, even if you tax them an extra 25%, you know, if they stop, it's an existential crisis. By existential crisis, if POSB wakes up and it's no longer there, it's an existential crisis for everybody. So I think it's the same thing with the big miners, that the big miners can ride it through. So I think that the auction may be sustained by them. It will be far less that you will see on the auction. I don't think that 2022 you will see $1.7 billion. It will be far less, primarily because the smaller exporters become unviable. But people like Zimplats, as long as the commodity prices are high, they're not going to stop production. I think the political risk, and even, you know, they have shareholders that they have to report to in Australia. If they stop, I think that it will be a big impact. So I suspect that there will be far less on the auction. You will also note that the government itself sort of moves away from tax in the local currency and prefers taxing in the US dollar. And last year, 600 million of taxes went towards the auction. So you can see what their mindset is like. So I think that the auction will sort of run through until maybe mid-year. If they really push it, maybe to the end of the year. But it will be far less in terms of allocations.
Yeah, I have a different view. I think that the auction will be sustained for as long as the Treasury thinks that it's working for them. I think that they're sensitive to the reality that at a certain rate, exporters stop being viable and collapse and fail to export. And we saw that happen in 2007 and 2008, where a lot of the gold mines, simply because of the gold producer price being so much lower than the cash cost of getting an ounce out, they collapsed and they stopped producing, and that led to the disaster that we witnessed then. So I think that Treasury and the central bank are sensitive to this truth, and they look at what the exporters are bringing in, and if the rate drops to a level where they start to see significant drop-offs in export receipts, they will start to move the auction rate to keep the exporters alive. And I think we've actually witnessed this because it's not, the rate was for the longest time at 85, 86, and it didn't move for weeks on end. And then there was some significant movement on the power market rate, and the exporters started making noises about being unviable, and the auction rate has since moved to the levels that we see it now. So I think that the current regime will manage it. It's far from ideal, but I think that for as long as they think it's working for them, they will sustain it, and they will periodically adjust the official rate to keep the export receipts coming in.
Any other question?
Any other questions, comments? Okay, I'm coming to you.
Good evening. I am Sandra. I come from the pension fraternity. I've heard all the numbers that we've heard from the economic side. So from a pension fund perspective, or pension funds actually rather, what would be your recommendation or advice or strategy or game plan we get into 2022 from an economic perspective? Thank you.
So there have been some positive developments in the capital markets that relate to pension funds. I think that the legislation is going through its paces to allow pension funds to invest up to, I think, 30% of their receipts outside the country in other capital markets, which is the standard practice in other African countries that have exchange control, like Zimbabwe. Like South Africa has had this in place for decades now. So I think that that will be an opportunity for local pension funds to get exposure to hard currency assets. And I think if the operational modalities are finalized and you are able to do this year, I think that's something that you should look long and hard at doing. And then apart from that, I think that we live in a high inflationary, in an environment with high inflation. So it makes sense to, from a saving point of view, to move out of monetary assets like bank balances and money market investments to equities, properties, and other non-monetary assets. I think that's the strategy that works in this market.
I think the easy answer is to say, don't hold cash, get rid of the cash as fast as it comes. And I think that's the answer you're looking for. But the harder answer that you probably don't want to hear, and the whole pension fund industry doesn't want to hear, is number one, we actually need to shrink the pension fund industry. Our pension funds cost too much. And in that process, we need to give the beneficiaries more control over their pensions. So most of us sitting here have our pensions managed by people we don't even know, who drive twin cabs, have lovely houses, big loans, but when we retire, what are we going to get? That's number one. Number two, I've forgotten number two now. But we really need to simplify the industry, reduce the cost in the industry. Oh, I remember number two now. Number two is that the pension fund industry needs to look at the payroll structures in this country now. Most employers have, in collusion with the employees, changed the salary structures so that a smaller portion of the salary is pensionable, which is actually threatening the viability of pension funds. with good reason, because the pension funds have just been chowing people's money and nobody seems to be getting value out of it. But you need to address the issue of the viability of giving value to pensioners and then go back to the payroll structure and make sure that the correct portion of the salary is going into the pension. She's got a follow-up question.
All right, she's got a follow-up question.
Just to get clarity, when you say pension funds are costly in Zimbabwe, what exactly do you mean? One. Two, you mentioned that people have been investing in pension funds without any, but they need to look at where are pension funds investing the money, right? And what happens to the assets that the pension funds are invested in, right? And three, you spoke of, oh gosh, it also has gone, but you mentioned about, it has got to do with strategic plan, a specific fund on what they do with their investment. Because some people in the market have benefited from these funds, because it's all about who is managing your pension fund and what are they doing with their money. Because so many private equity investments have been done by pension funds, and in some of these funds, they're actually getting some good return. And if you want to speak of a member specifically, the mortgage plans that have been happening since dollarization, and people have benefited from these structures. I'm a beneficiary, probably, that's why I enjoyed it. So we then need to look at the strategy of the fund. What have you done? You know, who are your trustees who are sitting on the board, who are making these decisions? You know, most of these we say our pension funds live into perpetuity, right? But when we're looking at the strategy that we are implementing right now, what impact does it have to the active members and to those who are retiring? Thank you.
It sounds like you and I have very passionate views about the pension fund industry. And can I invite you to a glass of wine after this, and we can have it out?
So my answer to you is a little bit unconventional. If you look at the pension fund industry elsewhere around the world, they chase return so that your pensioners will have something to live off for the latter years of their lives. But if you really think about it, why not, because of hyperinflation and inflation, why not look at actually real investment in the communities? So here I'm looking at, if you look at all the schools that have been built over the last 20 years or so, it's actually private individuals that have been building these schools. But I think that's a real investment, especially for your clients. If they can see their kids in schools, in affordable schools, we just don't have enough schools already in the country. And I think that's, if the pension funds could make those decisions. The other thing is healthcare, that instead of funding a hotel, I know when you're funding a hotel, you're chasing after alpha, but if you look at the investment where your customers are, if you were to sort out the healthcare system so that in their old age, they will have somewhere to go for healthcare, I think that will make a huge impact in their lives. Then they would not be like George and have issues with you. So I think that in terms of healthcare and education, those are the two things that Zimbabweans worry about. The reality, and I will lose Africa, is we're no longer a South Africa. We're now more a Ghana, Tanzania. And if you look at those countries, they don't have a robust pension fund industry, but they invest quite heavily in healthcare and in education. So it has to be unconventional so that you directly impact your customers.
Lawrence?
She still has something to say.
Okay, lastly, I don't want to turn this event into a pension debate or something, but as you said, we can have this discussion over a glass of wine.
You seem to have reservations about a glass of wine.
No problem. You have highlighted a very important aspect in terms of investment, how other countries have been doing it, even in South Africa, even in Europe, or even in the United States. Pension funds are actually driving the economy. As I said, we need to just go back and say, where is our money and what has happened to these pension funds? So here in Zimbabwe, it then bogs down or comes down to policy issues. When we have submitted several papers to do with Bedbridge Road, to do with Wange, to do with Kariba Power Station, solar plants, but policy issues, So I said, let's talk over and we discuss about it because we don't want to turn this into a pension debate. Thank you.
There's a hand there.
Oh, yes. Yeah.
And there's another one at the front here.
Thank you, my sister from pensions. I've got an interest with pensions as well. And as is Zimbabwean economy, we can't basically benchmark Zimbabwean economy with other fluid economies like South Africa. Zimbabwe really is an exception. And I agree with the point that you have raised that you need to be very innovative in terms of our investment in the pension funds, whereby you look like where you're talking of schools, where you're talking of other investments which can give return to the contributors in the pension funds. So I thank you for the contribution. My question is, my name is Love Moore from the ICT sector, and my question is, the financial sector here in Zimbabwe and globally is under attack by the disruptive technologies, mainly the blockchain and cryptocurrencies. And this is, the wave is coming into Zimbabwe. And if we continue like denying as if it's not coming, I foresee it's going to create another underground economy in the near future. Are there any strategies to accommodate these disruptive technologies in our financial sector? Thank you.
Thank you very much.
I guess you guys are looking at me because I'm the one who works in banking. And I think all three of us agree with the point you're making. Unfortunately, we're probably not the ones qualified to comment on that. I mean, really that question goes into what legislation is being made, what is the regulatory approach of the central bank to these technologies. So if you get an answer, I would love to hear it.
Yeah, perhaps.
Sorry, we couldn't hear you.
No, I didn't.
Okay,
Sorry, I
he
didn't
says
get that.
we are the participants. If we could contribute. Coming up of the framework, so he says. If I could just chip in on that. Thank you. I think that's a very fundamental question, which you guys should have touched as you were talking about the future of banking. You see, you can't talk about the future of banking and digitalization without talking about the fourth industrial revolution, which is, I think, essentially what he's trying to ask. What it is how it's going to affect us as banks. You know, when we are all able to work from home, imagine how many tellers we're going to lose. The jobs that are going to be lost now because of that. And we say, as you say, I think you spoke about the ability of people to withdraw money or do their transactions from home without being in the offices. That's one aspect and impact of the fourth industrial revolution. Now, in terms of employment of executives, CEOs, there's a Professor Marwala from South Africa who says, if you don't know economics, you have no social science, and you don't know engineering or some IT aspects, you are finished. You are not educated. Now, the concept of education, of not being learned, is no more reading, the inability to read and write. It's the inability to know fourth industrial revolution issues. So I think basically we can think about it, as bankers, we are seriously looking at it. You guys, I think in one of your write-ups, you did mention something very salient, where you say the Econet on its own actually is the largest number of customers in terms of value and volume compared to all the banks combined. That's a very salient telling you're telling us. If we don't move digital, we're finished. We're going to be finished as banks. Perhaps that gives me the opportunity to ask my own question, if I may. Talking about Econet and others, you guys you keep talking about printing money. You know, if I had my rural customers here, they'll be very disgruntled with that. If there was so much money, why are they not getting money in the queues? For the last 2 years, there's been a limit on cash withdrawals of $2,000. I don't know if there's some ways being drawn much more than that. Nobody is. So where is that cash going? So I want to understand from you guys, is it money printing or it's money creation by somebody else who is not the Reserve Bank?
Okay.
So when we say printing, it's basically a euphemism for creating money out of thin air. So most of it is in electronic format. The Americans they're quite sophisticated about their printing. They call it quantitative easing. In this part of the world, our last experience was printing.
So directly to the question, reserve money, as of October, and our own permutations it's actually higher by December, but this is directly Reserve Bank printing. It's about 120%. And this has to do directly with the central bank. Then you are right, there's a lot of money creation by the banks, and that's over 300% in year on year. So there is, just to give you an idea, reserve money, it's supposed to be at 0%. So year on year, you're not supposed to be printing at all if you're central bank. If you, depending on your type of economics, you might say print to the level of output growth. So if you believe that the economy grew at 7.8%, then you would have increased your reserve money by that much.
And then just talking about physical cash, I think there's an interesting anecdotal story where, you know, from a Zimbabwean perspective, we tend to look at the scarcity and, you know, the headaches and queues associated with getting cash as a problem, but it might actually be an opportunity. So if you look at the Kenyan market sometime in July 2018, you know, they had a big problem with their combis. Firstly, they struggled to collect tax from the combi operators. And secondly, they had a lot of combis that were not roadworthy because the combis would constantly bribe the police and the equivalent of the VID inspectors. So it was just a mess. And what they did, because of the penetration of their mobile money called M-Pesa, is they said they made it illegal for combi operators to handle cash for their operations. They could own, every one of them had to open a M-Pesa business account where all their revenue would come through. And the collector of revenue would collect the presumptive tax at the end of the month based on the receipts into this account. And they never had any cash to bribe the cops. So they had to keep their vehicles shipshape. So I think Zimbabwe, our cash crisis, as it were, can be viewed as an opportunity to transition to a completely cashless society where all transactions have an audit trail, and we actually increase the tax net, because one of our biggest taxes is the 2% IMTT, and we would benefit if all our transactions were electronic.
And yet Zimbabwean police have found a way to collect bribes even when there's no cash. I don't know where Lawrence is gone. I can't see him.
Where's your mic?
got two questions. The first one is just following up on the last presenter. You mentioned the 2% tax. When this tax was introduced, it was also meant to reach out to the informal sector, which was not banked, even also encroaching onto the EcoCash platform. So with the dollarized or partially dollarized economy, a lot of informal traders are now dealing in cash in US dollars. Everywhere you go, people prefer US dollars there. And here and there, they can take EcoCash, but it's US dollars. So it means all those people are outside the tax loop. So what do you see going forward, the Mutuli ministry going to do to try and also capture that informal sector to collect revenue, which already is slipping through their fingers? And my earlier question was on the exchange rate. You mentioned that you predict that the inflows at the auction are likely to go down a little the coming year. And also there's been quite a vast gap between the official and the parallel market rates. So what do you think, or what do you predict the ministry or the governor is going to do to try and bridge the gap between the two exchange rates? And also, at what level do you predict the exchange rate in the next couple of months, and taking into account the inflows that you are predicting and all that? Thank you.
Okay, I'll take the first one, and then maybe one of you guys can take the second one. I think the short answer to your first question is where there's a will, there's a way, and Mutuli will find a way. We already saw in the 2022 budget that the taxes, there's a lot of new taxes, there's some innovative taxes, and I use the word innovative very liberally because they're trying to cover that gap. You've got this example now of this strange calculation of if you get part salary in US dollars, part in Zim dollars, there's now this strange calculation of how you pay your tax, to the extent that you might end up having to pay your tax with money you don't have. So you'll see more of these creative ideas coming out of the Ministry of Finance to cover that gap. For all the reasons that Tinashe spoke about earlier, we're in an election year, and the bills will be high. And they've got to be funded somehow. And the first option, as Tinashe pointed, before printing, the first option is going to be to tax. One of you guys want to take the second one?
So the second question, just to contextualize, Gono's auction lasted for 23 months, right? We've gone now for about 20 months, right? So that sort of just gives you context. I'm just saying contextualize. What broke Gono's auction was electioneering, where it became very apparent that they had to print for an election. If there was no election, they could have stretched it. My own assumption is they know the consequences of printing. It's empty shells. So I don't think that they will print as much, right? And they will use, as what George has said, they will use taxation. So when you look at the auction, when you look at exporters, they're just taxing the exporters more than they should. So it's a super profit tax, if you want. And can they do that for the rest of the year? Well, how long is a piece of string? That's the question. But what I want you to keep in mind when you're making your strategies is what to look out for. So the number one thing you just need to look out for is how are they going to fund infrastructure? Because that will give you a clue on whether or not the auction will last long or not. As far as the reserve, as far as the Minister of Finance is concerned, Mtuli, just again another anecdote, but you understand the man. When the man was at IDB, he came up with this idea of taxing the informal sector using electronic tax. So these are things that he's very passionate about. And you will find that in Kenya and elsewhere in Africa, they've just picked up on that idea that, hey, you know, we can increase our revenues by electronic tax. That 2% now contributes 11% of our revenue. It's now a significant player, a significant contributor to our tax. If you look at export tax, Zimplats alone pays 17% of their turnover in terms of tax. That's in US dollars. So as far as him, Mtuli is concerned, balancing everything, if there was no infrastructure spent, then they could wing it until the election. But my big worry is once we get into the fever and they've made infrastructure a political issue, the question on our hands is where is the money going to come from? That's where Gono failed. Gono could push it, pontificating, arresting people, doing a whole lot of things, and he did so for 23 months. What broke the camel's back was electioneering. So, you know, I can't give a convincing answer because I want you to look for these signals. If there's manna from heaven and we suddenly have Forex for the infrastructure, then we are okay. We can survive 2023. But if there's no manna from heaven, then, yeah.
But still, in a way you're contradicting yourself, but I agree with the first part of your contradiction. Because in an election year, do you upset 9 or 10 million voters? Or do you upset 20 CEOs? It's an easy choice. You get these 20 guys in a room, you tell them you're going to take half their money, don't worry, I'll sort you out after the election. So I think that's likely how it's going to go. And I mean, unless the bill becomes really, really huge. But still, you'll go from the 20 to 50 to 100, but you're going to go from the top and try and keep the people at the bottom as happy as possible until they put their X on a ballot.
You're right, and I think that that's exactly what the Minister of Finance and the Ministry of Finance is thinking about. But there's this animal that has happened where already you're seeing funding of Zisco Steel. That wasn't in the budget. That wasn't budgeted for. Where is the money going to come from? That's the internal contradiction.
It will come from the 20 CEOs.
Let me just understand why the 20 CEOs?
No, so if you look at the concentration of money, I used to know these statistics for this country quite well, but if you look at the graph, don't quote me on the numbers, but you'd probably find the biggest 20 bank accounts in this country probably have something like 70 or 80% of the money in this country.
Of US dollars, Forex that is.
Same would apply in Zim dollars. That money is concentrated in a few accounts. So if you're looking for a place where, for lack of a better word, you know no kora.
You know, in fact, that was my second question when I asked. You see, you're complaining about the Reserve Bank taking 40% of the Forex proceeds. Where is the 60%?
The 60% remains with the exporters.
Correct.
But
you've answered my question. But in the bank accounts?
Yes.
Yes, but under whose control? Not the CEOs, Don't mistake it for the CEOs. It's under the customers. They can sell it to anybody who they want.
Yes.
So it's not the CEO's money.
It's the bank. It's the... Okay, fair enough.
Money. It's the customer's money.
No, sorry. So the CEOs we're talking about, are not bank CEOs. I'm talking about... No. So you've actually touched on the next stage. If we look at the previous story. So first, you upset Zimplats and Delta. And if after upsetting Zimplats and Delta, you're still not satisfied, then you call Mr. Kantlela for a cup of tea and encourage him to make certain investments with the bank's money. But that's further down the road. There's one here.
Thank you. We hear of leakages, particularly in the mineral sector, mining sector. assuming that you are aware and agree that these leakages exist, what impact do they have on the economy in general? Or if they weren't, they didn't exist, what would be the impact?
So maybe I'll speak from an accounting perspective. That's my background. And then maybe these guys will chip in.
Are you finally confessing to being an accountant?
It's my background. I once was. If you look at our current account, we're running a deficit. Our exports are less than our imports. But nobody's lending to us. How are we funding the deficit? I think it has a lot to do with grey exports. Smuggling, under invoices, under invoicing, under declaring, and so on. So that's at least,
basically.
that's at least part of it. But if somebody is going to under invoice, are they going to bring it all back in goods, or are they going to keep some offshore? I think there's quite a bit that is staying out there.
Yeah, I tend to concur.
Yeah, I think generally what he said, it's quite right. But also from an economic perspective, if you think about it, I think there's a lot of hysteria around the media when they talk about leakages. People forget that, yes, there is a leakage, but Mukorokoza has to be paid. And they are very clear about how much they have to be paid. So that money, we still see it as far as consumption in the economy is concerned. Where the big leakage happens, it's when somebody has a bag of gold and it goes through the airport and we never receive those receipts back in the country. Then yes, that's a direct leakage. But that bag of gold, there's a Mkorokoza somewhere who got paid. And their consumption, that Korokoza's consumption, we still feel it. So, you know, I'm of the opinion that I don't think that leakages are a big impact. They're a big impact as far as explaining why we have a current account deficit. So the accountant has correctly called it. But in terms of the economy and consumption in the economy, the Mkorokoza was not prejudiced in any way. He got his money full on, and he's still spending in the economy.
Okay, thank you very much. I will move on to the next person.
Thank you very much. Considering the level of confidence people have in financial institutions, what would be your advice to the authorities so that the cash under the pillows, under the mattresses is formally banked? What would be your advice? Because we expect, we believe the figures are in billions. Thank you.
The two gentlemen have very passionate views on this, so I'll let them.
Yeah, so they have to basically walk a very long and hard road of rebuilding faith and confidence, because the idea that people had US dollars in their accounts in 2015 and 2016 that lost, if you just use official numbers, more than 90% of their value over the last 5-6 years, that's still a festering wound in the minds of many Zimbabweans. So I think there's a very long, hard road to rebuild faith and confidence in the authorities' words that, you know, if you go to your bank and deposit a US dollar today, you can come back 10 years from now and withdraw a US dollar. I think it's a long and hard road that has to be, there won't be any shortcuts. I think it was a traumatic experience for many Zimbabweans to lose their savings, and it'll be a long and difficult road before people have faith and confidence to deposit hard currency in local bank accounts.
And just to build on what Rufaro has done, I like to just contextualize things. If you look at the last 10 years, we have changed legal tender 5 times in 10 years. So what you're saying is we're not so sure in the next 2 years even what legal tender we will have. So there's definitely lack of confidence, primarily because of that. So we probably need maybe 10 years of the same legal tender. Right now we're using the dollar, but a lot of people don't realize that it's actually under a temporary instrument, presidential powers. I think it's SI 85, which is we are only allowed to use US dollar now because of COVID. So who knows what will happen after COVID? So these are the worries and why the National Metals Bank continues to increase in its deposits, because we were seriously worried about the currency, the legal tender, and how sustainable it is in this economy. The other thing, just to contextualize, is we have a dual economy now. I think that's the reality. Now, when we talk about dollarization, it's cash dollarization. It's not an Ecuador dollarization, which we had. And if you want to study more on countries that have a dual economy that is also partially dollarized, then Somalia is a very good example, where it actually has a lot more dollars in terms of cash because of remittances. They get a lot of remittances, and a lot of that money is outside of the formal banking sector. And it takes a lot, like I said, maybe 10 years or so, for people to then have confidence in the legal tender and to actually start formalizing their deposits.
Thank you. This is a question that has been asked before. Mr. Chirigure behind me asked where you see the exchange rate going, and you didn't respond. I don't know whether you dodged the question or it was inadvertent. Thank you.
Unfortunately, I'm not a betting man. So I think where the rate will go, it's anyone's guess. But like I said, just look at, there's certain principles, there's certain things that you look out for, and that will tell you whether the rate will go or it won't go. So let me give you an example. Last year, the rate should have gone. So at the beginning of the year, you could have said the rate will end at 500 or 600. And then in the middle of the year, you then had IMF SDRs. And because of COVID, you had formal remittances increasing. So that somewhat stabilized the rate. So those are the conditions I'm saying that the things you must look out for, the things you must be reading and you must be asking people in the know is where infrastructure is going to be funded from. If you have that answer, which I don't have, so that's why I'm not coming up with the rate. Maybe Rufaro is actually a betting man and he might have an exact number.
No, we're not going to let him do that, bearing in mind that you can now get arrested for being in a WhatsApp group that people are discussing the rate.
In any case, I think Tinashe is right. It's very difficult to call. What I will say on an optimistic note is, if you analyze last year, the rate didn't move much in the first half of the year, and that wasn't because of SDRs. That was, in my view, because the government was actually quite disciplined about fiscal policy and its spending. And the rate, it did move, but it didn't move dramatically. Like the movement that we saw in the last quarter, from September to December, the rate moved quite dramatically, but in the first half, it was reasonably stable. So I think that from time to time, the Treasury does find the courage to be fiscally disciplined, and it's not impossible that they might, with some printing here and there might be some patches or some months of fiscal constraint and discipline, and the rate might surprise us in terms of not moving as aggressively as we fear.
Okay, I'm coming to you.
Good evening, everybody. I think I'd like to disagree with the comment that inflation actually creates shortages of product on the shelves. I think that what creates shortages of product on the shelves is actually interventions by government on price control, where you've got a fundamental flaw in the economy where you are trying to force a certain value of your local currency. What I think we've seen happening in Zimbabwe is that the government is printing money at an unprecedented rate. Just have a look how much money was distributed through GMB to the farmers this year. Have a look at your maize, have a look at your cotton, have a look at the input scheme. You know, I think that last year, I agree with you, it was stable in the first half, but it started to run when the harvest was coming into market. And we printed a staggering amount of money to buy that. And those farmers suddenly had pockets full of money and they wanted to find some way to protect it. There's absolutely no doubt about that. And I think that our economy is a cyclical one. You know, I always like to pose a rhetorical question. How many mining companies are there on the Zimbabwe Stock Exchange? And is the mining sector a central pillar to this economy? You know, I think that the answer to that will be found in the answer to another rhetorical question, and that is, how do we make, or how do we encourage Zimbabweans, how do we encourage each one of us to want to invest all of our money in this country? Because to me, that's the fundamental flaw in this currency valuation. It's people who do not trust the Zimbabwe dollar and they want to try and protect their hard-earned savings. And let me tell you, investment in property, it's a nice idea, but for the common man, it's too big and too lumpy. You know, the stock exchange is a farce. You know, when we can have a situation where Meikles is suspended over a Reserve Bank issue, it's unacceptable. When we've got a situation where the government suspends Old Mutual, PPC, Seedco, it's not acceptable. You know, you cannot have people investing in the stock exchange when their investment can just be wiped out by a simple little government gazette. It's not acceptable. You know, I think that half the problem here is that we've got a few people who are trying to control our lives for their own personal benefits. I really do believe that if we want to make a success of this economy, we have to deregulate it. You know, 30% withholding taxes. I'm afraid there's domestic tax terrorism.
Please hold your microphone closer.
Sorry. I was saying that, you know, this 30% withholding tax, you know, it's a wonderful idea. We said, yes, let's get total financial inclusion. Let's bring everybody in the economy into the tax law. Withholding tax was a wonderful idea. But that withholding tax is now used as a weapon against formal registered businesses. You know, for me, we're doing everything wrong. Right at the moment, it looks like the economy is booming. But it's because we are printing so much money. What is the actual real underlying value? You know, the Reserve Bank and the Monetary Policy Committee are focusing on this reserve money issue. For me, the reserve money is almost irrelevant. 24 billion is irrelevant. My question is, today, how much money is on deposit with the banks compared to 1 year ago? So maybe I'd like to just ask that one question. Does anybody know how much money is on deposit with the banks now compared to 1 year ago?
Yeah. Okay, so A number of questions there. Perhaps we didn't go through the hyperinflation 4 stages. So the hyperinflation 4 stages are, there's lack of demand, so government thinks it's wiser than the market, and they can just print and boost the demand. So that's the second thing, is you start printing, and then after printing, businesses start increasing their prices, so you have higher prices. And then the fourth stage after higher prices is price controls. So after price controls, that's when you then have empty shelves. So I'm sorry that we just skimmed through the 4 stages, but you're quite right. The reason why we saying empty shelves is price controls, but price controls because of the high prices because of the printing. The printing happened because government believed that there was low demand. So those are the stages. In terms of the actual money in the economy, you're dead right. According to the World Bank, the Zimbabwean economy actually had 2 consecutive years of negative growth of 8%. So cumulatively 16% negative growth between 2019 and 2020, which meant that our economy, which in 2018 was an $19 billion economy, actually regressed to a $16 billion economy. Now, what actually transpired in 2020, we'll only know that number in the 3rd quarter of this year. So the World Bank thinks that it will grow close to 5%. So that growth, it's not real growth, it's just recovery, but we haven't recovered from the 16% cumulative negative growth. So you're quite right that the economy is not as strong as perhaps the propaganda would allow us to believe. Then the other thing that you highlighted in terms of actual money that's in the economy. The actual money that's in the economy, it's $467 billion, and that was as of October. 467, right?
You mean 4.67?
$467 billion in Zim dollars, and of that, 1.8 is billion US dollars, but valued at 85. If you were to value that at a para-market rate, it means the actual money supply is closer to $1 trillion. So there is a lot of printing from the central bank, but there is also a lot of credit creation by the banks so that they preserve their capital as well.
Good evening, ladies and gentlemen. I just want to ask about the $50 that we are queuing for every week. I wanted to find out the rationale of having that facility and how sustainable that is, because I've been in the queues every week and I can't access the $50. I don't really understand how did it come up with that.
Well, they say the path to hell is paved in good intentions. So the idea behind the $50 is actually quite noble because they're basically responding to a valid criticism of the auction system, which is that if you're not a big formal company that has a relationship with a bank that's able to access the auction for import purposes, then you can't access money at the auction rate, and your only option if you need hard currency for whatever reason is to access the power market rate. So the brain trust behind the $50 decided that let's make the auction accessible to ordinary Zimbabweans, and they looked at what the payroll structure looks like in terms of what is the average wage or salary of a Zimbabwean, how much foreign currency can they actually reasonably afford a week, and they came up with this $50 number. And I think the challenge really is that they just don't have the hard currency to meet the demand, which is why there are these long queues, and sometimes people queue up for hours and they can't access the currency. So it's a sad state of affairs, and I think the solution really is just to make the auction real, where it's priced properly. Then you'll actually find more hard currency will come into the system, and there will be no shortage. Because the reason why there's a shortage is because the price is wrong. At the correct price, there wouldn't be a shortage.
Thank you. A follow-up to the question that he has asked. That was the same question that I wanted to ask. You see, I understand the rationale behind the $50 USD for the citizens. But my small research was, at the end of the day, these $50 notes are ending up in the parallel market, and mainly they are being taken up by those who are trading currency in the parallel market, instead of that $50 cushioning the citizens as per the idea or the initiative. If we do an assessment in terms of the effectiveness of this initiative, that's really my worry about the idea keeping on going on. Is it not fueling also the parallel market vis-a-vis the interbank, as a result, widening the premium of the trading of the currency, which is the parallel market and the interbank rate? That's my first question. My second question was on the investment in the country, basing on my brother here has raised a point about confidence about the citizens of the country. And another brother there also talked about the confidence, and the points that we have raised is about how can we control the currency and the like. But also my understanding about other fundamentals that can lead to a stable financial economy is all about the confidence of the people. Do we really have, or do we do the assessment in terms of the domestic investments of our own people, of our own citizens in our own country? Because as long as we don't have this domestic investment, and we keep on talking about the foreign investment, we are much weighted about this mega deals and the like, which are from outside. But in ourselves, we don't have confidence about ourselves, and there is no even domestic investment in our own country. Honestly, our financial sector will be remaining on a shaky ground. That's really my question. You can help me. Thank you.
Okay, I think your first question on the $50, it would be interesting if we got someone from the Financial Intelligence Unit to see if they've actually been tracing those 50s and seeing where they land up. But I think one can understand why you might surmise that it's ending up where you say it is. On the issue of domestic investment, what we do measure, and we know is measured, is the level of savings in the economy. And the level of savings in our economy at the moment is basically nil. And so if you've got no savings, you can't invest, because you only invest from savings. As Tinashe alluded earlier on, in China, that ratio is 45%. And they then have 8% growth per annum, literally for a generation. We cannot generate that level of growth if we don't have savings. We cannot generate the savings if we don't have confidence in the economy, and especially in the future of the economy. All of us are spending our money as fast as we're earning it, because we're not sure it will be worth anything tomorrow. But if we think that tomorrow is better than today, we will save. Okay, I believe we are now between people and their dinner or their beer. It's been lovely. I think we've enjoyed it. You guys have been a good audience. The participation's been great. We always say when we end our show, so we've got a show that's on YouTube. You should look us up, ZFN Friday Drinks. If you look us up on Facebook, ZFN Friday Drinks. We go live every Friday at 3 p.m. and we just have an informal chat about whatever's happening in the economy at the time. So we'd love to see you guys interacting with us and commenting. We're on YouTube, Twitter, and Facebook as ZFN Friday Drinks. And what we always say at the end of the show is have a great weekend, stay safe. COVID is real. Be good. If you can't be good at it.
Thank you, gentlemen. Let's give them another round of applause. Okay, ladies and gentlemen, thank you very much for your participation, for the very lively debate and comments that came from the floor. I would like to invite Farai Chirikure, our Divisional Director for Corporate and Investment Banking, to come forward and give us a quick vote of thanks. Farai.
Good evening once again. Mr. Jambwa, board member, management and staff here present, Vincent Securities, our most valued invited guests, ladies and gentlemen, it's my singular honor to propose a vote of thanks on this occasion. I, on behalf of POSB board, executives, management, our invited guests, and on my own behalf, extend a very hearty vote of thanks to all panelists and other speakers for gracing this important event on the 2022 Economic Outlook and 2021 Review. A big thank you to the Vincent Securities team for all the effort put in the research and presentation of information to participants. The economic indicators such as inflation, foreign currency generation, and particularly very important, are particularly very important to decision makers here and the nation at large. I must mention our deep sense of appreciation to the team for giving us a positive outlook on agriculture, bamba harvest, mining sector growth spurred by commodity boom, tourism recovery after the effects of COVID-19 pandemic. And we also would like to acknowledge our gratitude to all the participants who contributed by asking very lively questions. Finally, I would like to take the opportunity to place on record our hearty thanks to the POSB marketing team for the perfect logistic and guidance they extended to all of us at the event. I also extend my thanks to our host, Newlands Country Club, also known as the Lash, for their enormous cooperation in organizing the event. I cannot thank everyone enough for their involvement, participation, and willingness to take on the completion of tasks beyond the comfort zones. POSB board member, ladies and gentlemen, once again I want to state that we are all grateful to all speakers and guests who took time off their busy schedules to attend this function. We thank you for being with us this evening. It has been such a pleasure. Have a lovely evening and drive safely back home. Thank you.
Thank you very much, Farai. Ladies and gentlemen, this brings us to the very end of our formal program for the night. We still have 1 more hour of drinks. You are free to mix and mingle with our POSB team, our executives, our board member, and everyone else. The conversation can continue over drinks. Once again, on behalf of POSB, on behalf of myself, Lawrence Kupika, the marketing team, would like to thank you very much for your participation, and we wish you a very good weekend. Stay safe, and until next time, it's bye-bye from us at POSB.